Good afternoon, ladies and gentlemen. My name is Elliott-Purdy. I'm the UK branch manager for easy-forex, and today we're going to be looking at trading the CNH, which is the Chinese currency, the offshore version of it, the one that we can actually trade. Okay, so what are we going to be looking at? We're going to be looking at what the CNH actually is, what makes it move, what pushes the demand and supply, how it actually came about, a little bit of history for you. Then we'll look at the prospects for it. Is it going to be a bigger market? Is it something that you should be getting into, or are China going to actually bring it down? Okay, we'll look at the trading pairs available to you. What can you trade the CNH against? And what are the most favorable ones? What are the ones that are cheapest to trade as well? And then we'll also look at a chart, a live chart, how you might go about analyzing it. Firstly, everything I say in this introduction to CNH trading is purely for reference. Okay, nothing should be taken as advice. The risk warning is there for you to see. Firstly, what is the CNH? Okay, Chinese official currency is the renminbi, and the yuan is the unit of account. Okay, and it's denoted normally as RMB, the renminbi. Okay, but they actually decided that they would encourage use of their currency outside of the country. They had regulations meaning that you couldn't use it anywhere else for a long time. Okay, but they wanted to increase the role of the currency on the world stage. This is known as internationalization. All right, so they've actually created an offshore market for it in Hong Kong. And this, when you're trading it in the offshore market, is known as the CNH. It does trade at a different rate to the onshore, known as the CNY. Okay, the heavy regulation in China means that the CNY is very closely pegged to the US dollar. Yeah, if it starts to move outside of the range, then People's Bank of China will buy US dollars in line with its monetary policy to make sure that the US dollar CNY exchange rate is fixed. However, the CNH exchange rate is not fixed, and it can fluctuate. It normally stays very, very closely correlated to the CNY movements, so we tend to find that trading US dollar CNH doesn't actually provide many opportunities. As I mentioned earlier, we're looking at internationalization. Okay, so China wanting to make their currency very big globally. Okay, allowing people to trade with it, allowing people to reinvest back into the country as well, which is very important in terms of making their currency one of the biggest in the world. Some people do think that in 20 to 30 years' time it's going to overtake the US dollar as the world's currency. Okay, well that's a bit of history there. Why would you, as a trader, want to trade this pair? Okay, well, I mean, essentially as a retail trader, you have your own reasons, but there are many fund managers out there, institutions that are getting involved in the CNH, either on the short term or the long term as well. It really is being seen as an asset class now. Okay, global investors, risk managers, increasingly keen to get into China for the fact that it didn't suffer over the course of the financial crisis. Okay, it held strong. The CNH has been strengthening over time, and it seems to be somewhere where your money is less volatile. Okay, so the risk is less. This is how it's seen anyway. On an intraday basis, in terms of day trading, why would you trade it? The movements in the CNH from a technical analysis point of view will be exactly the same as any other asset class. Okay, so if you're looking at a chart of it, you're looking for support, resistance, trend lines, all of these things will still apply when you're trading in the CNH currency. So it's very easy to adapt the strategy from one currency into this one. If you're only looking at one currency all the time, you're limiting your opportunities to trade. Yeah, if you look at the euro dollar, that's all you trade, and you look at a chart and you can't see an opportunity, what are you going to do? You're going to pack up and go home? You're not going to trade anything? You need to be looking at other pairs as well, other asset classes to invest in, and this is one of the ones that you should have under your belt. As I mentioned, large funds now are having this as part of their portfolios. And if we look at net open positions in terms of CNH, most people, these institutions are very long the CNH. Okay, so they are holding CNH. Not many people are short it. They foresee that in the future it will strengthen, and that is why they're long the CNH. Future of the CNH, the demand for it, okay, and the growth. Now, as you know, China is a huge economy. Okay, it's a huge economy, and within the country, obviously, there is a lot of renminbi. However, outside of the country, there is hardly any of it. It's the 17th most traded currency in the world. And as a trader, you would think that this is going to increase over time. Okay, and you're not the only one. Yeah, like I said, most of the big institutions, funds, retail traders, brokers will of the opinion that CNH trading is going to increase. The reason we think this is because of the information we're getting from China. Okay, from Chinese government, from People's Bank of China. They really, really want to encourage the trading of their own currency outside so that they have more power, and it also increases the trade, the ability to trade for exports and imports into and out of the country. So in theory, it should increase their economy as well by allowing their currency and reducing the red tape by allowing their currency to be traded outside. They have mentioned that they're looking to produce further CNH offshore centers like the one they've got in Hong Kong. Okay, London actually specifically has been pushed as a location for this due to its already high regard in forex trading terms, and obviously it's probably the center for foreign exchange trading of the world at the moment. This is why it has been pinpointed as a possible, and other offshore centers have also been pushed out there as well. We do expect this to happen. Trading has already been allowed outside the country since 2010. Okay, however, even if you have the ability to trade outside, there has to be a point, there has to be a real reason for people to want to hold this currency. It's all well and good trading in paper and trying to predict whether people are going to buy or sell, but in real terms there needs to be some sort of demand and supply for this currency outside of China. At the moment, you cannot bring CNH into China and spend it. Okay, which is why it hasn't really taken off as much as we think it's going to. Yeah, because if you've got CNH, you can't actually use it to buy anything other than other currency. So what we really need for China to do, which is what they're doing at the moment, is to lift capital controls on incoming CNH so that it can actually be spent within the country. And when that happens, and as that happens, the liquidity of the market will increase even further. Okay, now the interesting part then. We've done our history. We know what the CNH is, how it works, and the fact that we can actually trade it. But what can we trade it against? And why is it good to trade? Okay, most people, as we know, don't trade exotics. Okay, you have a look at something like the CNH or something like the South African rand or Turkish lira, and you think, oh, cool, blimey, those spreads are really big. How am I supposed to make money with the spread so big? Because as soon as I get into a trade, all I see on my profit and loss is a loss, and it's quite a big one. I need to recover that. It's going to take me ages to recover. So it's really hard to make money. I'm going to have a big edge on the market in order to do so. This is not necessarily true. Okay, the spreads are wider in terms of the amount that you pay up front on a particular size. However, spread as a transaction cost always should be measured as a percentage of the expected profit. So the daily range is extremely important. How volatile the pair is compared to the spread is your true cost of the transaction. Okay, cost of transaction for easy-forex, because we have fixed spreads, because you have guaranteed stop loss, is purely the spread. If you're trading with another broker, you'd have to look at the actual spread that you got at the time, which is going to vary. Add that to the spread that you got out at, which is going to vary, and also add that to any slippage that you got. So if it goes past your stop loss, or if you try to get out but you didn't get the price you wanted, you'd have to add that to your transaction cost. So transaction costs can build up if you're trading on that type of platform. With easy-forex, fixed spreads, guaranteed stop loss, you know what your transaction cost is. You don't have to measure it separately for each different trade. So when you're looking at the true transaction cost compared to the volatility, you're going to want to look at the spread in comparison to the average daily range. Okay, so how much movement can you expect to get from paying in and actually opening this trade? Let's look at this chart. US dollar CNH, we've already mentioned the People's Bank of China will change their monetary and even their fiscal policy in order to keep the CNH pegged, or the CNY actually, they're looking at that pegged to the US dollar. CNH very closely correlated with the CNY, obviously. That means that the US dollar CNH rate hardly moves at all. Average daily range just 90 pips, the spread 35 pips. I mean, you know, it's the equivalent to US dollar only moving 10 pips a day. Okay, so if you're going to trade US dollar CNH, it's going to have to be, you know, on the long term. Yep, so not really interesting for day traders. Euro CNH, slightly better. Yep, we're looking at around about 3 times, the ratio is 3 times better, but it's still not great. Okay, spread 45, average daily range is about 10 times that. Okay, so, you know, euro dollar equivalent, maybe it's only going to move 20 pips. Okay, if you got in, you'd probably be in the trade for at least 1 or 2 days to make it worthwhile on the euro CNH. Now the interesting part, Australian dollar CNH, or the CNH against the Japanese yen. Okay, China and Australia and Japan are very closely linked in terms of news coming out, how their economies affect each other, because they export and import with each other so often. The trade is really huge between the 3 countries. Whenever you see you know, good news for China, normally it's going to have an effect on the other 2 countries, and vice versa. However, they have a relationship between themselves as well. Yeah, you can have positive news for Australia, and you will see the Aussie dollar CNH go up. You can have negative news for China, and you will see the CNH Japanese yen go down. Let's look at the ratios then. Spread of Aussie dollar CNH 45 pips, average daily range 790. Okay, we're looking at about roughly 18 times the spread. Normally when you do a trade, you want to look for at least 7 to 10 times the spread in order to make it worthwhile, assuming that the spread is your only transaction cost. Obviously we've got 18 times the spread here. We can easily get that, easily achieve our target in like half a day. We're talking purely on averages here. So if we're looking for maybe 500 pip movement or 400 pip movement on the Aussie dollar CNH, that's completely achievable within a day. Okay, so we can trade intraday on this pair, and it is worthwhile. Yeah, you're only going to be paying out 5% of your profit target as spread, and this is what a lot of people are doing when they're trading euro dollar, pound dollar, any of the majors. They're normally going to be paying out 5% of their expected profit in the spread. So your transaction cost as a percentage of your profit, which is what costs normally are anyway, is going to be similar to trading in a major, because the daily range is so big. Okay, CNH Japanese yen is pretty much the same. Okay, so the average daily range roughly 18 to 20 times the spread, which means that the spread itself is very cheap compared to the movement that you're looking at. Okay, the transaction cost, actually true transaction cost in terms of the percentages, is small. All right, so when you're looking at trading these exotic pairs, well, we call them exotics. I don't think CNH is going to be exotic in a few years' time, but it is at the moment. Don't just look purely at the spread. It's about the percentage, and it's all about the relationship with the average daily range. So if you look at something and say, oh, that spread's big, I'm never going to trade that, you could be missing out on something that will, provide you with a lot of opportunities. And Aussie dollar, CNH, Japanese yen, they're going to give you a lot of opportunities. Lastly, let's just show you what it's been doing recently and how similar it is to analyze this pair compared to others. I've got a chart here of Australian dollar against the yuan, the offshore version, the CNH, and we can see that over the past few weeks, we got pretty much from the beginning of the year here, going back to 26th of December, it was kind of ranging, and it hit a high roughly around the 13th of Jan at 5.4762, and over the following 5 days, okay, it came down around about 2,000 pips in 5 days. Okay, so it actually would have picked up, so let's say you did a one-lot trade there, okay, in fact, let's say you only did a 0.1 loss, just a 10,000 Australian dollar trade, okay, that's going to be 1 CNH per pip, so you picked up 2,000 CNH, which is around about $300 and $330, something like this, okay, only on a 0.1 lot trade. On a one-lot trade, over $3,000, okay, a movement in just 5 days. So do not think that this is something that is difficult to trade in, because the movements are there for you to be picked up. We had solid support here from 1 to 3 touches from 5.3553. Okay, been talking about it in my analysis recently anyway. Then obviously when we broke through that and dropped down, the movement was significant, as you'd expect. Okay, we got weak news from Australia, which actually pushed it through the level, and it didn't look back until it got down to 5.28, at which point it turned around, and it's come back up now to what was support, has now turned into resistance at the 5.3550. And handily enough, if you take a Fibonacci from the high on the 13th to the low on the 18th, 19th, that line that was support has now turned into resistance, is also the 38.2% retrace. So all your standard technical analysis rules apply, support and resistance, Fibonacci retracements. We can see that it reached that level, started to turn around. I mean, that would have been a nice selling point for you at that time. That was just over a day ago. I was looking at this yesterday. Okay, it looked like it had turned around. Obviously, a sell trade might have been good at that time. Probably too late now. Let's see what happened to it. I can actually show you if I bring it up. Yeah, we can actually see that it has dropped from that level, and it's just kept going and going and going. This is where it was yesterday, okay, when I made that image, and it's just kept going, approaching the low that we had on the 19th, down at 5.3. Okay, that move, if we'd managed to get in it at 5.355, it's moved down around about 750 pips, and on a one-lot trade, 7,000 CNH. Okay, we're looking at over $1,000 for a one-lot trade move in the space of just a day. Okay, it's a big move, and it's something that you can definitely look for when you're trading on the CNH. So take into account, this should definitely be part of your arsenal, part of your armory when you're looking at picking up trades, opportunities in the market. Use the same type of analysis that you use. There's loads and loads of news out from China every single day. It's on our financial calendar. You can look into it. You can see announcements that are made. They have all the same type of economic data that we get from USA, from Pound, from Europe, if you like looking at economic data, and those things will affect the markets. You can trade off them, or you can just trade the technicals like I've shown you. Thanks a lot. That's all I wanted to go through in terms of the CNH, how it's traded. Okay, I hope you really enjoyed it. And if you have any questions, you can obviously contact easy-forex regarding it.